The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Good afternoon. We're getting right down to business here. We are doing it live, doing more at 4 weekday afternoons right here on 790 KABC. Right after the great Guy Benson Show at 3 and just before the 790 KABC News Blitz with Randy Wang. Stay tuned at 6 o'clock this evening. I'll be back on the air this evening for The Way Home radio show and podcast presented by the Union Rescue Mission. I'll be back on the air at 6 this evening. In fact, every Thursday evening at 6 with Mark Hood, the CEO of the Union Rescue Mission. Tonight, guests include former Union Rescue Mission CEOs Reverend Andy Bales and Jeff Hudson, who will be part of the upcoming 135th URM Anniversary Gala coming up on March 21st in Century City. Go to urm.org for more information and stay tuned. Right now, Motec on Money. We're live on the air on 790 KBC, also streaming live online worldwide at kbc.com and the on-demand Motec on Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Well, big news in Hollywood this afternoon and in the business of show business, Netflix saying it is walking away from its deal to acquire Warner Brothers Discovery after Warner Brothers Discovery said it had determined that a last-minute bid by Paramount Skydance was a better deal. Netflix says that countering Paramount's latest offer was no longer financially attractive and that it had decided to abandon its bid. This is the latest plot twist in a big takeover battle that's been playing out for months now. Netflix declines to match Paramount's $31 a share offer for Warner Brothers. Netflix stock is soaring about $10 now, and after hours trading, Paramount Skydance up slightly. Warner Brothers Discovery shares slightly lower. Nvidia taking the spotlight today on Wall Street in reaction to its earnings news, which came out after the closing bell yesterday. The stock's seen a wild ride today, with Nvidia stock closing lower. $259 billion right out of his pocket. Yep, Jensen Huang and company reported stellar quarterly results, but the numbers were not enough to ease Wall Street's concerns about what's going on with AI. Investors pointing to Nvidia's stalling $100 billion deal with ChatGPT maker OpenAI is one main reason for the drop today. Nvidia's stock sell-off, erasing its $259 billion in market cap, one of the largest daily wipeouts on record. Keeping track of all of that with Nvidia and all the latest tech news, I'll be speaking shortly live on the air with Wall Street tech guru Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, which happens to be headquartered right here in Southern California. Another big story, Block, that's the parent company of Square, and the Cash App conducting a major reorganization. The payment technology company plans to cut almost half of its workforce. That big announcement coming today. The restructuring will bring Block employees count below 6,000 versus more than 10,000 today. Block shares closed up 259 to 54 and change and are up about 22% now in after-hours trading. Dell Technologies has a blowout outlook today while signaling the industry-wide memory chip crunch seems manageable. We see Dell shares up about 10% in after-hours trading, and Rocket Lab stock is moving lower after that company's better-than-expected fourth-quarter earnings could not ease investors' disappointment over another Neutron rocket delay. Rocket Lab stock down about 5% in after-hours trading. What is the outlook on tariffs, taxes, and the economy now following last week's U.S. Supreme Court ruling on tariffs? The president's announcement of a global tariff and his announcements in the State of the Union speech this week. We'll get some insights from Grover Norquist, president of Americans for Tax Reform. Will be joining us live later this hour. And mortgage rates have come down some more this week to the lowest in years, while mortgage delinquencies have ticked slightly higher in recent months. We'll get the latest on real estate and mortgage rates from Jeff Lazerson, the president of MortgageGrader.com and OC Register real estate columnist. But first, on your money, the markets, the economy, Nvidia, and the whole works now. As promised, joining us live now is Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. Daniel Ives, thank you very much for taking the call here this afternoon.
Yeah, great to be here, Frank.
Busiest guy on the business scene here, and I know you had a whirlwind last 24 hours. Let's start with Nvidia and your reaction to the earnings news and the Wall Street reaction we saw today.
I mean, look, they were stunning numbers. They beat the street by called 700 bips. And then you look at guidance for next quarter. I mean, you're almost looking at 80% growth. So when you see essentially what's playing out here, I mean, they have over 500 billion of demand that they actually could see and almost basically ink between Blackwell and their new architecture Rubin. Look, I think the reaction, as me and you've talked about, is this AI ghost trade. Investors are just selling these stocks, worried about, what could ultimately come out. Is it too good? But I continue to view it that this is this second inning in terms of this AI revolution. Any AI bubble thesis essentially is thrown out the window with those Nvidia earnings.
All right, and the stock ended down by $10 and change today at 184.89. Any given what's happening lately, any adjustments on your price target on Nvidia here?
It went up to 300 because it's our view this is a $6 trillion market cap in 2027. And I think, look, we're going through one of those white knuckle periods in tech. And I think the reaction of Nvidia today is a highlight of it. Just like you saw with IBM selling off 13% in a blog post, or what we saw with software in terms of this doomsday scenario. I think this will be seen as generational buying opportunities for those willing to play the AI revolution, and that's really our thesis.
Yeah, what about that IBM story, and what are your thoughts on IBM given what's happened this week?
I mean, that was a fictional thesis that because Anthropic is going to come out essentially with COBOL, as vibe coding, essentially as a code, that's going to disrupt IBM. It's, some of these, the reason they're ghost narratives, because you can't fight a ghost. And right now, IBM being a good example, you're talking about a company that's basically, what Arvind's done, he's transformed IBM. They're going to be one of the biggest successful players when it comes to monetization and AI. So I think you have to separate out between truth versus fiction. And that's what's happening in this tech trade.
What else got your attention on the Nvidia report, the earnings news that came out, and Jensen Huang's comments?
Well, I think Jensen hit the software argument head on. I mean, look, no one has a better perch than Godfather of AI Jensen. And I think what he's saying is software is going to play a huge role. And it speaks to our bullish view of Salesforce, ServiceNow, Oracle, Microsoft, and others in terms of the use cases. But I think right now we're going through one of those dystopian good news is bad news is worse news when it comes to tech. But look, go back a year ago, DeepSeek, Liberation Day, and other moments, right? And I think those that think that this AI trade's done, they're not following the CapEx dollars, because the CapEx dollars, it's a fourth industrial revolution, and that's real money that's being spent.
And what about the aspect here? NVIDIA's stalling $100 billion deal with ChatGPT maker OpenAI. What do we need to know about that?
I mean, I think, look, they're probably going to put $30 billion in. It's probably $100 billion round. And I think actually once they raise the $100 billion, that takes a big risk off the table because of some of the worries, the too big to fail and others around OpenAI. Because I think, Frank, what's happened here is like OpenAI, when they raised that money, when Oracle, they laid out how they're going to raise their 45 to 50 billion because of the worries around OpenAI and others. And we're going through one of those guilty till proven innocent moments in tech. But the reality, you're building out a new economy for consumers and businesses, as well as also that's going to spread to financials, to energy, to healthcare as a broader trade.
On the air live with the familiar voice of Daniel Ives at Wedbush, the other big story that's developed this afternoon, Netflix walking away from its deal to acquire Warner Brothers Discovery after Warner Brothers Discovery had determined that a last-minute deal by Paramount Skydance was a better deal. We see Oracle stock moving higher today, and Netflix soaring in after-hours trading up about $10 or so. We see Warner Brothers Discovery shares pretty much flat, and Paramount Skydance had closed higher and moving slightly lower at this moment. What's your reaction to this big news? Of course, every company's a tech company nowadays, but certainly Netflix walking away from this deal. Give us your reaction to that big news this afternoon.
Look, I think writing was on the wall. Whether it was financial, political, Netflix wasn't going to win this deal. But look, they walk away with $3 billion in terms of the breakup fee, right? And that's why the stock's up. And look, you know what? This has been a soap opera. It's good to put it to rest. It always felt like it made more sense. I think at the end of the day, Paramount owning it, and now at least this chapter is done. And ultimately, look, for Netflix shareholders, you get $3 billion.
What's your outlook on these names here? Netflix, of course, had that stock split, hovering around 84 or so now, and it looks like 94 after today's action here now. What's your view on Netflix and the other names involved here?
Yeah, look, it's our view. I mean, everyone's chasing Netflix. When it comes to streaming, content's king. And their ability to raise prices with minimal churn and expand internationally is unrivaled. So it just speaks to the broader thesis of tech that's happening from the consumer to enterprise, to broader. And, in an economy that is somewhat Goldilocks in terms of as it plays out. Obviously uneven, you need Fed to cut, as war ultimately comes in, but it's, go back to a year and a half ago, recession. You don't hear that, right? I mean, we're in a little bit of a Goldilocks scenario.
All right, and we had a crypto expert on the show yesterday. There was hope that this crypto winter would finally be over, but it looks like cryptos came under some pressure again today, although well off the recent lows here. Bitcoin right now hovering at around 67.5. Ethereum is above 2,000. What's your view of what's going on the crypto scene here?
Yeah, I mean, look, we've talked about, it feels like maybe there's some bottoming going on here. But, look, it's a huge digestion period for crypto. And I think, there's all different theories about why, but, it's not going away. This is going to be, a new asset class, and it's volatile. Investors are adjusting to it. But I do think, Frank, as me and you have talked about, there's a risk-off trade in tech. It's a risk-off trade in crypto. Gold's obviously bounced back. Silver continues to be volatile, copper. But, you're seeing a lot of very dramatic moves. Look at the Korean market. Korean Kospi's up, 50% this year? The point is, you're seeing some dramatic moves across the board, both on the upside and downside.
Are you doing any bottom fishing in all of this, especially with strategy or Bitmine Immersion or iBit or any of the ETFs that are crypto related?
Yeah, look, I think investors, continue to have an appetite for it. But, look, our view in this, it continues to be, when I look at all the sell-offs, tech, specifically the software sell-off, is the one we continue to view more table pounder. That's the one that continues to stick out front and center. Salesforce, ServiceNow. These names, markets pricing them in like they're structurally broken, yet they're going to be core players in AI.
In all this, and some say it's AI related too, the yield in the 10-year note is at 4%, the lowest we've seen in quite some time. What about that part of the equation?
Look, I think, it all comes down to the view of what Warsh is going to do, just, what the appetite for treasuries are. You want to see it settle in that kind of, 3.75 range or whatever it may be. Mortgage rates are slowly coming down, and I think this is a trend we're going to see. I think you could argue that rates have peaked, at least from a mortgage perspective. And that's important, but obviously it's also important that, when Warsh eventually comes in, he cuts.
All right, in space, getting new attention with all the exciting things on the drawing board. Tesla, of course, in focus, and the SpaceX IPO. Rocket Lab making some news this afternoon. What's getting your attention in the world of space, and anything that you're doing ahead of the SpaceX IPO at this point?
Look, and this is also good for the thesis that Motec's going to get into space by 2027. So it all kind of goes into the thesis, right? I look, SpaceX. When this comes public, it's really going to be a watershed moment because it's our view space. It's not just about launches and people paying $1 million to go into space for an hour. We're talking about the enterprise piece, data centers in space, AI. Look what XAI and SpaceX, and I think eventually Tesla. I mean, that's sort of, I think, where the world's going.
All right, so it definitely appears that it will not be a letdown. It'll be a liftoff when it happens. Do we know when the IPO will actually take place, or do we have an estimate?
No, we got to see as that all plays out, over the rest of this year.
On there live with Daniel Ives, and good old Grandpa holding onto a gold coin has done pretty well with gold back above 5,200 an ounce here. Mm-hmm. You've been following the precious metals lately too. What are your thoughts about gold and silver here?
I mean, like I said, the uptrend in gold was there, right? I mean, you've had a pullback, but you're seeing a strong appetite for it. And I think, especially as you're seeing volatility in crypto, volatility in tech, I think you're seeing investors, definitely, look at gold. I could say copper, obviously silver a bit, but that's volatile in terms of, that appetite.
Any specific places where you are putting money now and or taking it off the table?
It's tech, Frank. It's just this sell-off in software. It's unlike anything I've seen in my, covering tech stocks since the late 90s in terms of the dislocation.
You're sticking with Motec?
Exactly, man. It's, it's one where golden opportunity in terms of my view.
Terrific. Well, Daniel Ives, thank you very much for taking the call here on probably one of the busiest days that you've seen so far this year, and appreciate it. Look forward to our next conversation. That is Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. Daniel, thank you very much for joining us live here this afternoon.
Every day, excessive delays and denials from big insurers keep patients from accessing the care they need. And when care is urgent, these delays can be disastrous. These practices cost billions in wasteful spending, driving up costs for American families. But while big insurers put up barriers, America's hospitals and health systems are in your corner, navigating endless reviews and appeals to get you the care you need when you need it most. It's time to curb these harmful practices and put the focus back on patients. Brought to you by the Coalition to Strengthen America's Healthcare.
You didn't start a business just to keep the lights on. You're here to sell more today than yesterday. You're here to win. Lucky for you, Shopify built the best converting checkout on the planet. Like the just one tapping, ridiculously fast acting, sky-high sales stacking, champion of checkouts. That's the good stuff right there. So if your business is in it to win it, win with Shopify. Start your free trial today at shopify.com/win.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Motec Money continues, 790 KABC, mixed finish to the day on Wall Street today with the Dow manager closing gain of 17 points at 49,499. The S&P 500 slipped 37 at 6909. The NASDAQ taking a hit, down nearly 300, down 274 at 22,878. The yield in the 10-year note is down to 4%. That's the one that impacts the fixed-rate mortgage rates, and they've come down, as we'll be hearing in detail coming up later this hour with Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. Nvidia stock in the spotlight on its earnings news, which came out after the closing bell yesterday. The stock went all over the place and closed lower today by nearly $11 at $184 and change. Big news in Hollywood this afternoon with Netflix announcing it was walking away from its deal to acquire Warner Brothers Discovery after Warner Brothers said it had determined that a last-minute bid by Paramount Skydance was a better deal. Looks like Netflix declined to match Paramount's $31 offer for Warner Brothers. And this Hollywood drama has played out, and looks like it's a Hollywood ending for Paramount Skydance. Looks like they'll be the new owners of Warner Brothers. We see Netflix stock, a big winner in all of this afternoon. It's up about $9 in after-hours trading. Paramount Skydance shares have closed higher today by about $1 at 11 and change. Warner Brothers Discovery stock at $28.80 and slightly lower in after-hours trading. Taking a look at the price of gold, it's up there above 5,200 now at 5,201 and change. Silver at 88 and change. Platinum at 2,271 and change. And palladium at 1,812.50. Checking the cryptos now, we see Bitcoin a bit higher this afternoon at 67,598. Ethereum at 2,028. Doge at the moment at 9 cents. The earnings parade continued this afternoon with shares of Dell in the spotlight. Dell Technologies, as it's now known, giving a blowout outlook today while signaling the industry-wide memory chip crunch seems manageable, according to MarketWatch. The maker of servers and personal computers expects $138 billion to $142 billion in revenue for its new fiscal year. The forecast includes a projection for $50 billion in AI revenue, double what Dell posted for fiscal 2026. Dell shares up about 10% now in after-hours trading. And the parent company of Square and the Cash App, that company is called Block, is conducting a big reorganization. That payment tech company plans to cut about half of its workforce. That's part of the announcement today. Restructuring will bring their employee count below 6,000. They've got about 10,000 now. Block shares closed up today at $54.53 by about $2, and they're up about 22% now in after-hours trading. And shares of Rocket Lab moving higher today, $2.45 at $72.65. Rocket Lab, of course, in the space business, falling after hours after the company's better-than-expected fourth-quarter earnings. Neutron, which is a medium-lift reusable rocket that analysts say can compete with SpaceX's Falcon 9, was expected to make its debut late last year, but the company delayed its maiden flight to prevent a catastrophic launch that the CEO Peter Beck said would have been a heartbreak. Rocket Lab stock is down about 5% now in after-hours trading. Tesla shares pulling back today, down nearly $9 at $408 and change. Motec on Money continues here, 790 KABC. The fallout continues following the Supreme Court decision on the president's tariffs. The latest is that the Trump administration's Department of Justice has until tomorrow, Friday, to weigh in on a motion by a tariff refund plaintiff to expedite payment of the now illegal duties, the tariff duties, through the Court of International Trade. Trade attorneys reportedly say there are about 2,000 cases that have been filed by companies suing for tariff refunds. Plaintiffs fear the government may try to draw out the refund process, and the Supreme Court guidance to the federal court system after its ruling last Friday provided a period of roughly 1 month for the next steps. So what is the outlook on tariffs, taxes, and the economy following last week's Supreme Court ruling and the president's announcement of a global tariff, and also his announcements in the State of the Union speech this week? Let's bring in Grover Norquist now, president of Americans for Tax Reform in Washington, who's got a ringside seat to all of this. Grover Norquist, thank you very much for taking the call. Great to have you with us, Grover. Take it from the top and your reaction to this latest news here.
Well, several things happened. You had the Supreme Court decision which said that the law they used couldn't justify the tariffs. And that means the tariffs were illegal, which means you got to give the money back. And that was the agreement when they didn't hurry up the decision, right? They said, we'll take our time. But when it is decided, the federal government, the Trump administration said, if you tell us we can't have it, we'll give it back. So don't be in a hurry. And it's in Trump's interest. It's in the country's interest. It's in the economy's interest to get the refunds back immediately. Why? Because that will be helpful to the economy. You're talking about all the people the companies that were doing business in the United States that paid taxes to the federal government that the Supreme Court said weren't owed. And if you give them back, that gets invested into small and large businesses around the country. So that'll be very helpful to the economy to do that. And we do want to, stick with the rule of law. We don't want, if somebody says this tax is not properly passed, then it can't be kept or collected. And I certainly, when we passed laws to reduce taxes, I don't want somebody on the left going, nah, I don't like that. We're not going to let people have the money that they're owed legally. So we'll move on. The president has some tariffs that he does like, and he thinks he has a shot at making the case that he has the legal case for them. I think the most important thing we can do is to keep deregulating. His leadership on energy deregulation, on automobile deregulation, all of these things has been very helpful to the economy. And going out 50 years is going to make all the difference in the world as we go through a world where people make cars for consumers, not for bureaucrats, and create electricity for consumers, not for bureaucrats. So this, and the tax cuts that have been made permanent now, this is hugely helpful as we go through into the future.
Very interesting developments. Of course, there was a lot of concern about the Supreme Court ruling, but the markets really didn't react that badly, although we did see that washout on Monday where the Dow plunged more than 800 points for a variety of reasons. But have we ever seen a situation where Uncle Sam had to refund as much as $175 billion in potential refunds? Obviously, leading up to this, there was a lot of concern about it, and certainly how this is going to play out remains a concern.
Well, the Constitution is pretty clear on taxes and tariffs. And so I don't think anyone was surprised by the decision. And that's why the stock market didn't move that much when the decision came out, pretty much as people expected. And so whatever good or bad was going to flow from that decision had been baked into the stock market for a matter of months.
All right, and now we have the president's, looks like a 10% tariff has kicked in. He's proposing a 15% tariff. That was his announcement last weekend. Looks like there'll be legal challenges to this now. So suddenly trade and tariffs are back on the front burner. What do you expect the next move to be in this? And obviously the president feels very strongly about tariffs based on what we heard in the State of the Union speech this week. So where's all this heading?
Well, the president talked fondly about the power that tariffs, that when he wielded tariffs and he went into a meeting with people in Azerbaijan and Armenia were shooting at each other, and he said, okay, you guys got to tamp it down or I'm going to hit you with big tariffs. And that was part of the negotiation. It doesn't have anything to do with trade, but it was a tool that the president used in a number of negotiations, some on trade and some on foreign policy issues. So I understand the president looking at that and going, that's a very useful tool. I wish I had it. There is a question as to whether the Constitution allows tariffs to be used in that way with just the executive branch. The executive branches say so. And so as we move forward, he did use the power to get to discipline some countries that were cheating us in terms of international trade. But now the question is, we have an election in November. And tariffs have been very hard on our farmers and very hard on a lot of retailers. And so reducing those tariffs will be helpful to the economy as we move forward. We're no longer needing to use them in negotiations, as the president had said that's what he wanted them for. And so I think that would be helpful to the economy as we move forward. And certainly we have made clear to the world that we don't appreciate when the Europeans tax our businesses, our high-tech companies are being taxed with laws that are written to only hit American companies. I mean, it's obvious what they're doing. That needs to be dealt with. Companies that don't let our movies to be sold overseas because they say, well, free trade doesn't matter for cultural issues, which is something they write into it, into some of these agreements. But I don't think we should allow them to get away with that on a regular basis. China really restricts our movies into China. I think part of it's financial, part of it's they don't want people in China to see what American shoes and clothes and cars look like. So I think we're going to be moving forward fairly well into the next election and the next several years. We certainly are seeing an increase in investment in the United States because of expensing. where the government no longer taxes you when you invest in computers and trucks and equipment for workers to make them more productive. That's a very, very big help. That's why in 2019, we saw a 6.8% increase in the median income for a family of four. Why? Because of the vast amount of new investment, and that is happening again now. So this next year looks should be good, should help on the election, and then a strong election for the Republicans means no tax increases for the next 2 years.
Anything else that caught your attention in the President's State of the Union speech, and anything else that taxpayers can look forward to? Any initial ratings on how refunds are going in this tax season?
Refunds are higher than usual, and the IRS is saying that they're expecting quite a increase. They're talking about a lot of money flowing back into people's pockets because there were so many tax cuts, and some of them were new and different, and people and even professionals weren't quite sure how much lower taxes would be. So they're finding out taxes are lower than they'd expected, and so for just that reason, you're seeing people who paid too much over the last year. They're not going to get it back. Be sure, and when you do your own taxes, or if you have someone you do them next year, don't send the government too much money. You're just giving them an interest-free loan when you over withhold. Don't under withhold too much because they get snotty about that and want to punish you. But don't pay them too much because why should the government hold on to your money? You should more accurately reflect the amount of taxes that you do as we move forward. The biggest change, I think, is going to come over time from that Trump account effort, where anyone in the country can set up a account for a child who's under the age of 18, and they can put up to parents can put up to $5,000 into that child's account. Your employer can put in money to support your efforts for your child as part of a non-taxable benefit like parking or pensions or health care. And foundations can give money to children also. You saw Dell Computers founder, Michael Dell, and his wife gave, I think it's $6.8 billion to 24 million children, so to help them start their account. And this means that millions and millions of people under the age of 18 are going to have money that their parents, their grandparents, their parents' employers put in for them. $1,000 when you get born, when it's in the 4-year period, last year, the next 3 years, the government will put in $1,000. But that's really to get you started. We're going to have an educated collection of 21-year-olds voting in the future who know what the stock market means, who understands how much investment grows over time. And when you save $1,000 a year for 18 years, what that means in terms of cash, or $5,000 a year for 18 years, we're going to have so much more economic literacy than we've had in previous generations. When Kennedy was president, 10% of Americans owned stock directly. Today, it's 60%. That's pretty cool.
Well,
but that's older people. I want 20-year-olds to understand how this works.
Yeah, and to listen to Motec on Money every afternoon right here on 790 KBC, and hear you as well,
Grover. Your readership and your listenership.
Yes, and you as well. And thank you very much for taking the call here, Grover. It's always great to have you with us, and thanks very much for that comprehensive update. As you are known as the leading tax advocate here in the United States. That's Grover Norquist, the president of Americans for Tax Reform, live with us here on Motec on Money on 790 KBC.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Every week on the Stacking Benjamins podcast, we talk personal finance trends.
Not paying attention to the headlines is the strategy proven to work.
One headline, economists fear global recession. Literally the next headline, stocks hit all-time highs, investors optimistic on the future.
They're even doing it to the weather now. 28 million people in the path of this snowstorm. That means 340 million people have got good weather. It's just weather.
Layers, people, layers.
Stacking Benjamins. Follow and listen on your favorite platform.
Motac of Money continues here in 790 KBC. It looks like mortgage rates have come down again this week to the lowest we've seen in years, while mortgage delinquencies have ticked slightly higher in recent months. We're also keeping an eye on the latest home price readings. Let's get an update now on what's happening in real estate and mortgage rates. Jeff Lazerson joins us live now, president of MortgageGrader.com and also Orange County Register real estate columnist. Jeff, thank you very much for taking the call here this afternoon.
Thanks for having me, Frank. So, big news today. The Freddie Mac rate came down to 5.98%. So it hasn't been under 6% in 3.5 years. So that's really, really good news for everybody that's in the home buying and home refinancing market. The 30-year fixed locally is at 5.5%. So it's quite a bit lower than the Freddie Mac rate. 15-year is at 4.99%. So 15-year under 5%. And then the high balance loan, that's at 5 7/8%, and that's from $832,751 to $1,249,125, and then the 15-year high balance is at 5.5%. Jumbo loans are down to 5.75%, so that's anything over the 1,249, 125, and FHA and VA are down to 5.25%, and then lo and behold, the adjustable loan is down at 5 1/8% for 5 years. So things are looking good.
See it tonight, read about it tomorrow, but hear it now on Motac on Money, live on the air with Jeff Lazerson, president of MortgageGrader.com and OC Register real estate columnist. Jeff, where do you see the rates go from here?
I'm pretty optimistic, Frank. I think that rates are going to come down some, not a ton, but I think they're going to come down some more this year. And they've been flat for a while. It seems like inflation's under control, and the job situation isn't great, so that actually helps interest rates. The only thing that I worry about is the debt and the deficit. It's one day that's going to come calling. I just don't know when. Is it going to be this year or 5 years from now? But we just have way too much debt, and that could really bite us and make interest rates go up because the investors will want a higher return to invest in the U.S.
All right, what's happening with home prices? I think we got the recent Case-Shiller report out, the Totality S&P formerly CoreLogic report, right? What did you see in that report, and how are things looking here in the Los Angeles area?
Well, the Totality report, at least the one are we talking about the delinquency report?
Yeah, that's one of them. They put out a ton of reports, but certainly on the home price front, maybe just give us your observations of what's happening on the price front, and certainly the delinquency report that came out today as well.
So on the home price front, everything is flat. Some areas prices are dipping a little bit. Orange County is flat to up a little bit. LA is down a teensy-weensy bit, and the Inland Empire is down a little bit. But relatively speaking, it's flat. And as people learn about the lower rates and the higher buying power, more people will get into the market to buy, and that will firm up the prices. You just watch and see.
All right, and as far as mortgage offerings, what's happening? How tough is it to get a mortgage nowadays?
I don't think it's too tough at all, Frank. The people that are having, if there is anybody that's having a tough time, it's that first-time buyer. Part of it is because of the affordability problem in Southern California. It's so expensive. But the other part of it is they didn't get any training in their life about how to become a homeowner. And it's so important because it starts family wealth and it starts generational wealth. And compared to renting, owning is just the thing that you should do. Renting is so expensive, and then you rent and it's hard to save money. So where do you get the down payment? Well, you can get it from your savings, your retirement accounts. You can get gifts from your family. I was talking to my son the other day, and he was clicking off all of his friends that have bought places, and all but except for one, had family help. Just one did it on his own. Everybody else had either the parents co-signing or giving gift funds or both. And so I took that as a hint that he might want my wife and I to help him out. I don't know. But anyways,
well, if anyone can help, it's you. And I love how you tell it like it is, Jeff. When times are bad and when times are good, you describe yourself as the Maytag repairman not too long ago, right? But with now mortgage rates at the 3.5-year low point, below 6% that you just described here today, how is mortgage activity looking nowadays?
Well, the mortgage business is really good. It kind of sucked for 3 years or so. I mean, it was pretty flat for 3 years, but it's really, since the first of the year, it's gotten a lot better. But a lot of it is also refinance business. It's not all purchase business. So, we're getting a sprinkle of people that, anybody that bought in the last 3 years, anybody that has a rate over 6.5% could easily refinance and save a lot of money. I had one lady over the weekend, she's saving $1,000 a month. She went from 7 5/8 to 5 5/8 just by making that phone call. So it's real important. If you have a high rate, check around, make some calls, and get your rate down.
That is impressive. And when does it make sense to refinance, given, of course, that refinance wave we saw, and a lot of people still have the low fixed rates, but that was a while ago now. So what makes the most sense in the current environment?
Well, it depends on what your motivation is. So if you need cash out, then there's never a bad time to do it. In fact, you can get cash out now up to 95% of your property value, believe it or not. So that's any time. And then as far as rates go, there's a formula that we use to figure out how long it takes you to recoup the cost of the refinance. And so you just basically have to take the cost divided by the monthly savings, and that'll tell you how many months it takes to recoup. So if it takes you 24 months to recoup and you're only going to be in the house for 1 year, you don't want to do that refi. But if it takes you 24 months to recoup and you think you're going to be there for 5 years, then of course you want to do the refi.
Terrific, Jeff. Well, thank you very much for that update and that guidance. And we'll be looking for your column this weekend. Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist, live with us here on Motac on Money on 790 KABC. Mixed finish for stocks today, with the Dow up 17 points at the bell, the S&P 500 down 37, the Nasdaq plunging 274 points as Nvidia stock tanked today, down nearly $11 at 184 and change despite its blowout earnings report. Stay tuned now for the 790 KABC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow, 790 KABC.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!